Welcome back to Talk Tickers, the show where we unpack these earnings calls, so you don't have to. And today we're going to be diving deep into 1-800-flowers.com's latest report.
That's a bouquet of surprises.
Yeah.
It really is. What's fascinating here is that while their revenue overall dipped 5.7% in Q2, it's not a simple story of, a company wilting under economic pressure.
Right.
There are some self-inflicted wounds. We see some interesting trends and even a whiff of.
Ooh.
We'll get to that later.
A little intrigue. I like it. Okay, so the CEO actually admitted to being embarrassed about a major tech snafu during the holidays.
Yeah.
Not exactly the words you want to hear from, a seasoned executive.
Not the kind of language you expect, right?
Right.
This really highlights the challenges companies face as they scale up their e-commerce operations.
Yeah.
1-800-flowers.com delivered over 7 million orders.
Wow.
But even a small percentage of errors can have a massive impact on the bottom line and customer trust.
Yeah, for sure. Okay, so let's unpack the numbers a little bit here. 5.7% decline in total revenue, with e-commerce sales specifically down 8.3%.
Yeah.
That's a pretty significant hit.
It is, but it's not a uniform downturn. Their wholesale gift basket business actually saw some growth.
Okay.
Which suggests there's more to the story than just, a general economic slowdown.
Right. And speaking of things that aren't so rosy, let's talk about this order management system debacle.
Uh-oh.
It sounds like their new system at Harry & David, which is their gourmet food brand, went haywire during the busiest time of year.
Oh, no, during the holidays.
Yeah. So imagine, millions of orders for pears and cheese.
Right.
Getting stuck in a digital bottleneck right when people are expecting these holiday gifts.
Yeah, they estimated this cost them a staggering $20 million in lost e-commerce revenue.
Yeah, to put that in perspective for our listeners, that $20 million represents millions of missed birthday bouquets, thank you gifts. Really drives home the impact of these technical issues.
Wow.
Not to mention a $4.8 million blow to EBITDA. For those who maybe aren't familiar, EBITDA is essentially a measure of a company's operating profitability.
Exactly. It strips away things like taxes and interest expenses to give you a clearer picture of the core business performance. And in this case, it took a hit.
They also mentioned softer consumer demand, particularly in corporate gifting.
Yeah, companies seem to be tightening their belts, and that's reflected in lower average order values, fewer items per order, and a drop in the total number of corporate orders.
Okay.
Their corporate gifting revenue actually plummeted from $84 million last year to $70 million this year.
Wow, that's a steep decline. So what's the plan to combat this more marketing?
Well, they acknowledge that simply throwing money at marketing isn't the solution. They're seeing diminishing returns on these traditional marketing channels, especially free and low-cost options.
Right. It feels like those days of easy organic reach are over. So what's their secret weapon?
Well, they're emphasizing this idea of relationship innovation. They want to create more personalized experiences, enhance customer engagement, and build what they call a celebratory ecosystem.
Okay.
Essentially, they're trying to move beyond just transactional interactions and foster deeper, more meaningful connections with their customers.
That sounds great, but it also seems like a pretty big pivot, especially after this major tech fail that likely alienated some customers. So how do they plan to measure the success of these relationship innovation initiatives? What metrics will they be tracking?
That's a great question. They haven't explicitly outlined their metrics for success, but it'll be interesting to see how they quantify something as intangible as relationship building.
Right.
They'll likely be looking at things like customer lifetime value, repeat purchase rates, and engagement metrics on their digital platforms.
Got it. They're also focusing on these work smarter initiatives to streamline operations, reduce costs, and improve efficiency. Sounds like a classic two-pronged approach. Improve the customer experience while also tightening the operational belt.
Exactly. And speaking of belt tightening, they did hint at the possibility of increased mergers and acquisitions.
Interesting.
Sometimes companies get acquisitive when the market gets tough, looking for bargains or strategic assets.
So they're keeping their options open, makes sense?
Yeah.
What about the outlook for the rest of the year? Any projections?
They're actually pretty optimistic about Valentine's Day, mainly because it falls on a Friday this year.
Oh.
Apparently Friday is a prime day for flower deliveries.
People probably like to surprise their significant others at work.
Yeah.
And it sets the mood for the weekend.
Exactly. And it's not competing with the Super Bowl for attention this year, so they've got a few extra selling days.
Right. I like it. I like it.
Okay.
Okay, so they also highlighted the continued strength of their wholesale business, driven by increased in-store retail traffic.
Yeah, it seems like people are venturing back into those brick-and-mortar stores,
Yeah,
which opens up opportunities for 1-800-flowers.com to expand their reach beyond online channels.
interesting. So not entirely doom and gloom, but definitely some challenges to overcome.
What about tariffs? Were those a concern?
They actually have minimal exposure to tariffs.
Okay.
Only about $40 to $45 million out of their $1 billion cost of goods sold comes from China.
Okay, so no major supply chain headaches on that front, but they did mention a close call with potential tariffs on Colombian flowers.
Right. Colombia is a major flower supplier for the U.S., so that would have been a major blow.
Yeah.
Fortunately, that situation seems to have been resolved.
Okay, so we've covered a lot of ground here. A tech meltdown, shifting consumer behavior, some bold corporate strategies, and even whispers of, well, we'll get to that.
You will.
What does this all mean for our listeners, whether they're seasoned investors or just folks who enjoy sending flowers or gourmet gifts?
That's a great question, and it leads to some thought-provoking takeaways.
All right, let's take a quick pause there when we come back. We'll unpack the key takeaways from this earnings call and explore what it all means for you. Stay tuned. 1-800-flowers.com is at a crossroads. You know, they're grappling with a softening economy, evolving consumer preferences, and then the fallout from that OMS implementation disaster.
It's definitely a more complex picture than just people are cutting back on luxury spending. What
Mhm.
stands out to you is maybe like their biggest hurdle right now.
I think it's how they respond to these challenges that will determine their future trajectory. You know, this emphasis on relationship innovation is particularly intriguing,
Yeah.
especially after a very impersonal tech failure.
Right.
It suggests they understand the need to rebuild trust, but can they actually deliver on this promise?
Yeah, that's the million-dollar question.
Uh-huh.
It seems like they're betting big on tech to fix a problem that was caused by tech.
It's a calculated risk for sure if they can leverage technology to create these more personalized and engaging experiences.
Mhm.
Think AI-powered gift recommendations, curated content based on individual preferences, a seamless experience whether we're shopping online or in a store.
Right.
It might just work.
So it's not just about having the fancy website or app, it's about using those tools to actually create those genuine connections with customers.
Exactly. It's about understanding their needs, anticipating their preferences, and making them feel valued. Their success hinges on moving beyond, simply processing transactions and creating this more holistic, celebratory ecosystem, as they call it.
Okay, they're also banking on the continued strength of their wholesale business, which makes sense given the resurgence of, in-store shopping. We've been talking about that a lot lately.
Yeah, their wholesale partnerships give them access to a wider customer base and diversify their revenue streams, which is particularly important as the e-commerce landscape becomes even more saturated and competitive.
Yeah, they're actively seeking out those new wholesale relationships and expanding their product offerings.
Yeah, that's a smart strategy. It allows them to tap into different market segments and potentially reach customers who might not typically shop at 1-800-flowers.com directly.
Okay, so now everyone wants to know, what's the verdict on this stock? Buy, sell, or hold?
We can't offer financial advice here.
Of course, this is purely for entertainment purposes.
Yeah.
But what are your thoughts on their overall prospects?
I think 1-800-flowers.com is facing some strong headwinds, but they're also showing a willingness to adapt and innovate. Their long-term success depends on their ability to execute their strategic initiatives, overcome those operational challenges, and really navigate this evolving landscape of consumer behavior and the broader economy.
So a lot of ifs and buts, it sounds like. This story is far from over.
It is.
And now for the moment you've all been waiting for our This Is Not Financial Advice segment, where we pitch an outrageous but plausible trade idea inspired by this earnings call.
Remember, folks, we're just having fun here. Please don't base your investment decisions on our wild speculations.
All right, disclaimer out of the way. What if 1-800-flowers.com capitalizes on the growing legalization of cannabis?
Ooh, okay.
They already have the infrastructure for delivering perishable goods quickly and discreetly.
You're thinking they pivot from roses to a different kind of bud?
Exactly. Imagine partnering with licensed dispensaries to offer same-day delivery of, shall we say, celebratory bouquets. Think of it as the Uber Eats of, well, you get the idea.
I do. It's not entirely outlandish. They could leverage their existing customer data and personalization capabilities to create these cannabis-themed gift baskets for various occasions.
Imagine, congratulations on your promotion. Here's a selection of artisanal edibles delivered right to your door. They could even rebrand Harry and David as Harry and Mary Jane and offer gourmet-infused treats.
Okay, now you're getting a little carried away.
I know.
But I have to admit, there's a certain entrepreneurial spark to this idea.
There is, of course, there would be regulatory hurdles and the risk of alienating their core customer base, but hey, a little disruption never hurt anyone, right?
Right. In a purely hypothetical, this is not financial advice kind of way.
So there you have it, folks. Our completely irresponsible, yet oddly compelling trade idea, 1-800-flowers.com. From roses to, well,
Now, all jokes aside, this earnings call brought up some important trends worth paying attention to, whether you're an investor or just a curious consumer.
Okay, let's recap the key takeaways here. What should our listeners be thinking about?
Firstly, the e-commerce world is getting more complex, and competitive companies like 1-800-flowers.com need to be agile, innovative, and operationally efficient if they want to thrive.
And they absolutely cannot afford any more tech meltdowns, especially during those peak seasons.
Absolutely. Secondly, consumer behavior is shifting. This pandemic-driven e-commerce boom is fading, and companies need to adapt to these changing spending habits, particularly among more budget-conscious consumers.
So that means offering a wider range of price points and finding new ways to attract and retain customers who are watching their wallets.
Precisely. And thirdly, personalization is key. Consumers expect tailored experiences and relevant recommendations. Companies that leverage data and technology to meet those expectations will have a competitive edge.
It's not just about having a flashy website or app. It's about making those tools work for the customer, understanding their needs, and making them feel like more than just a transaction.
Right. It's about building a genuine connection. Finally, the wholesale market presents a significant opportunity. In-store shopping is back, and that allows companies like 1-800-flowers.com to broaden their reach and diversify their revenue streams.
That's a smart move, especially as that online marketplace becomes more crowded and competition intensifies. So there you have it, our deep dive into 1-800-flowers.com's Q2 2025 earnings call. We covered their financial performance, their strategic initiatives, their operational challenges, and even their hypothetical venture into the cannabis market.
We explored a lot, from traditional bouquets to some more unconventional ones. But remember, this is not financial advice. Always do your own research before making any investment decisions.
And be sure to check out our show notes for links to the full earnings call transcript and other resources.
Thanks for joining us on Talk Tickers. We'll be back next week with another deep dive into the world of earnings calls. Until then, happy investing.
So we've explored their financials, their strategies, their fumbles, and even dreamt up a budding new business model.
Hypothetically, of course.
Hypothetically, of course. But now let's kind of shift gears and talk about what this all means for the average person out there, listening to this.
Yeah, what we've seen with 1-800-flowers.com speaks to these larger trends that are affecting a lot of businesses today.
Right.
Firstly, the e-commerce space is getting so competitive. Companies need to be really agile and innovative to stand out.
Yeah, and as we saw with that OMS meltdown, operational efficiency is just absolutely critical. One mistake during a peak season and it can cost millions.
Exactly. And secondly, we can't ignore the evolving consumer landscape. The pandemic-fueled e-commerce boom is fading and spending habits are changing,
Right.
especially among those lower income demographics.
So companies need to adapt. And that might mean offering a wider range of price points or finding, creative ways to build loyalty, or even just rethinking their whole approach to customer engagement.
Exactly. And that brings us to our third key takeaway, the importance of personalization in today's market. Consumers are increasingly expecting tailored experiences, relevant recommendations.
All right.
Companies that can deliver on that expectation will have a distinct advantage.
It's not just about having the sleek website or the user-friendly app. It's about using data and technology to actually understand your customers' needs and preferences, anticipating what they want and making them feel valued.
It's about making that human connection even in a digital space.
Yeah, for sure. And finally, let's not forget the potential of the wholesale market as in-store shopping rebounds. Businesses like 1-800-flowers.com have this opportunity to diversify their revenue streams and reach new customers.
Yeah, it's a smart way to navigate the increasingly crowded e-commerce arena.
So there you have it, folks. Our deep dive into 1-800-flowers.com's Q2 2025 earnings call. We covered their financial performance, strategic initiatives, operational challenges, and even their hypothetical venture into the cannabis market.
We explored a lot, from traditional bouquets to some more unconventional ones.
We did.
But remember, this is not financial advice. Always do your own research before making any investment decisions.
And be sure to check out our show notes for links to the full earnings call transcript and any other resources we mentioned.
Thanks for joining us on Talk Tickers.
Yeah.
We'll be back next week with another deep dive into the world of earnings calls.
Until then, happy investing, everyone.